Really great to have Jim on site at Laiva, Central Finland. It's Europe's biggest gold mill, which is incredible, in brand new condition, ready to turn on in the spring.
We know how many tonnes we can get through the plant and we know what the recoveries are. So we have some really solid numbers.
If Jim can really achieve production levels of 80,000 ounces, that's a very profitable business. That might be a $5, $6, $7 stock.
That's just the way they build things here. They build them to last. This plant will still be standing here in 40 years' time, no question.
We're doing around at 80 cents with a full warrant at $1. That values the group at only 40 million Canadian. To build this today would cost you at least 400 million euros, or what's that, 600 million Canadian. Laiva Gold actually has 500 mum and dad sophisticated investors. And if you'd like to get involved, go to laivagold.com. There you'll find Edward Baum, and Ed will be able to connect you and myself. I'd happily give you a shout, but the minimum investment's 2,000 Canadian dollars.
All right, today we're having a discussion with Jeremy Gray, the CEO, and Jim Jackson, the general manager of Laiva Gold. The first time Jim drove me and Lars onto the Laiva Gold mine site back in September 2023, I remember having this thought in my head of, why haven't I bought more stock? That was due to the massive scale of the infrastructure, the really high quality infrastructure in place. And I gotta say, I have been a very relaxed investor ever since then. Back then I understood the grander picture of Laiva Gold and the amazing infrastructure in place and the enormous cash flows this mine could generate with the correct initial investments up front. And I believe that bigger picture Jim and Jeremy will try to convey to you. So gentlemen, great to have you on the show, welcome. Perhaps we can start off with a short and sweet overview from your side, Jeremy, on Laiva Gold.
Yeah, thank you so much, Stein, and really great to have Jim on site at Laiva, Central Finland. It's Europe's biggest gold mill, which is incredible, in brand new condition, ready to turn on in the spring. And look, it's a private company right now, but we're planning to restart. It's 6,000 tonne a day mill. It's got 2 million ounces in the pits, which we think we can grow to 4 million. It also has 3 million tonnes of low-grade stockpile that's ready for reprocessing. And our current round of 80 cents with a full warrant at $1 implies a value of only 40 million Canadian, which, as Jim will show you in a minute, to build this today would be closer to 400. So thanks for having us. Jim, do you want to say good day?
Yeah. Hi guys, good to see you again. I wish you were here with me, freezing outside. But we're just standing at the back of the mill at the moment. As you can see, we have our low-grade leaching circuit, the 1,000-tonne tanks just on this side, and then our second circuit is our high-grade circuit with the smaller tanks down this here. Jeremy mentioned about the 3 million tonne stockpile of low-grade. It's sitting just there. If I had a good arm, I could nearly hit it. And then that runs across. You can see just across the other pile of rock here, that's the ROM just right there. So it's very, very close to the mill.
Well, all right, gentlemen, thank you for that first great overview. And Jim, I will ask you significantly more questions about that value that's already in place at that mine site. But Jeremy, you already started talking about the elephant in the room. Of course, Laiva Gold is currently private. You are doing a raise. Perhaps you can talk about what it's all about, how people can get in touch, and what the barrier of entry is, because people at home can invest even though it's private, correct?
Absolutely, and we have a phenomenal shareholder base amongst our three companies. Laiva Gold actually has 500 mum and dad sophisticated investors currently today, approximately that number. And if you'd like to get involved, go to laivagold.com. There you'll find Edward Baum, and Ed will be able to connect you and myself, and I'd happily give you a shout. But the minimum investment's 2,000 Canadian dollars as an investor. And we're planning to restart the business in the spring. It might be in the summer. But the economics at today's gold price is just astounding. In fact, our president, Charles, wrote a very interesting note yesterday, which we can send out on a link. But the last time this was operating by the first guys who built this, they were just getting 1,000 euros an ounce. Compared to today's price, that's nearly 2,600 euros an ounce. So Jim is likely to be selling gold for 3 times the price of the first operator who built this 10 to 12 years ago.
Well, great. Thank you, Jeremy. And Jim, I would love you to talk about what I would call the value in place. I'll also make sure Lars will name this segment, that subtitle. Perhaps you can talk about what is currently there, what infrastructure is there, ounces in the ground. What are we looking at, Jim?
Yeah, for sure, guys. It's obviously a fully built mine. We have all the infrastructure already in place. As we mentioned before, we have our leaching tanks at the back of the mill. We have our high-grade ponds straight at the back of the mill. And then across all our stockpiles here Actually, I don't know if you can see in the distance, but there's probably 150 windmills that you can see in the distance. So we've got plenty of nice green energy here.
Show the crew around, Jim. This is a great opportunity for everyone to see what a beautiful world-class facility you have inside.
Yeah, that's what we'll do. We'll go inside. We just got to be a bit careful on the steps here, guys. Okay, guys, so we're in the main mill building now. The whole place is enclosed in this ginormous shed. We have a ag mill sitting up the top. It can process 6,000 tonnes a day. And then the other side runs down into the pebble mill down below him. So even though the two mills look very similar in size, they have a very different purpose and use a very different processing.
Great, Jim. It's definitely an amazing facility, and I remember the presence of high quality infrastructure when we were there. Definitely, it is truly an amazing facility. Perhaps we can talk about what kind of numbers are we talking about. If this mine were to be operational today, how many ounces a year could we produce? What kind of cost would you be looking at? Those type of numbers.
Would you like to do that, Jim, or do you want me to do it while you get a better picture?
Yeah, my day, Jeremy. I'm sort of focusing here, but on what I'm walking.
Yeah. So look, Stein, great question. This is Europe's biggest gold mill, 6,000 tons a day, all-in sustaining costs 1,400. Jim, I think, and the team can get this to 80,000 ounces a year. Remember, the first guys who built this were planning to do 115,000 ounces, so 80,000 is not a big push. It's brand new, as you can see, state of the art. But at 80,000 ounces, if you do the numbers, that's 6,000 ounces a month. You're making $1,400 an ounce, probably almost cash profit right now if you're producing. So you're talking about 7 million euros a month of profitability, close to about 80 million euros a year. This business is capable of generating at such a strong European gold price. It's all about the European gold price because 99% of Jim's costs are in euros, not in dollars.
And Jim, you have found the next spot. What are you going to show us?
Okay, good for your time. We're going to see the whole process pretty much from here. If we look up towards the top of the first yellow mill, the top of the ag mill, we have the feed chutes that come in from the outside, from the stockpile, which runs through the ag, and then the pebble mill, and then flows around the circuit in ever decreasing sizes. We have screening decks up the top. Then she runs down through flash concentration. And then the spiral concentrator down the bottom. And this thing behind us here is our Nelson concentrator. We're lucky to have this concentrator on site. It's a continuous concentrator, so we don't have to stop to run the gold out of it. It's just a continuous process, so it's a very good machine to have. And this is actually one of the problems that the previous operators had. They didn't have a spare ceramic ring which runs inside that concentrator, which actually separates out the heavies, and they ran all sorts of problems with that. So we have a brand new one sitting in a box down on the other side in the gold room, and that's ready to install. So when we get back in production, it should be like new.
Great, Jim. Thanks for that overview. And perhaps that's a topic we can dive into. Of course, this mine went bankrupt at some point. That's why Jeremy and his team was able to acquire it for so cheap. Perhaps you can take us through, Jim. What will you be doing differently this time around? And what are the lessons learned?
Yeah, for sure. We're in the enviable position, whereas we don't have any debt. So we don't have a bank hanging over our shoulder wanting money like the other guys used to have. We also have a much stronger gold price. And we also have the benefit of the previous operators, shall we say, mistakes. And I'm quite sure that I was told once that anyone that buys a business doesn't think that the last operators didn't try their best. I'm sure they tried their best, just they ran out of capital. They got going without a proper mining plan, and they got going without having enough capital behind them to make sure that the plant was running properly and had all the spares that they needed. So, apart from the first operators who sort of suffered all the commissioning issues and then had a very bad gold hedge, which we don't have any of that, the other operators simply didn't have enough capital or enough preparation. So from our side, we're going into it with historical production figures. We know the grades that we can get out of the pits. We know how many tonnes we can get through the plant, and we know what the recoveries are. So we have some really solid numbers to work our budgets on. Whereas previous operators seem to work their budgets on numbers that were given to them from 43101s and such. whereas we're going from actual numbers. So we know what we're getting ourselves into. We've certainly done a lot of work on how to improve on the grade coming to the mill and also recoveries. So, but nonetheless, we'll be working on known numbers, and then it's all upside from there.
All right, great, Jim. Thank you so much. And while you find the next spot, perhaps I can ask Jeremy regarding the history of this project. And in your presentation, in your slide deck, there's this chart where you outline the gold price and how it has developed over the history of Laiva. And also, perhaps you can dive into the story of how Laiva came to be in your hands.
Absolutely, Stein. And I think the first operator, Nordic Mines, did a phenomenal job. They built it, they funded it. As Jim said, the problem was they took 53 million euros of debt. The mill was 6 months delayed. And importantly, when they took that debt, they were required to sell 36% of their gold at only basically 1,000 euros an ounce, which was about a 300 euro discount to the price at the time. But because of the delays, that 36% became more than 80% of their production was being sold at a huge discount. So if you think about it, you're in a terrible gold market, the price keeps falling, you're selling at a huge discount, you've got huge debt to repay, and that's when they basically went into voluntary administration. But to their great credit, they built a beautiful business. The other two operators, Nordic Gold and Not So Gold, then took on even more debt that was more expensive, never had the working capital. And as Jim said, every operator does their best. Let's not criticize anyone for what they've done in the past. They had the right motivation, the right belief. But the last two operators just had too much expensive debt. I'm talking 25, 30% a year debt. And that's the beauty of Laiva Gold. We bought this out of Pilar Gold, our other company, bought this for 30 million Canadian. We then span it out to Pilar shareholders and gave them a free share. And we then raised another 8 million Canadian over the last 2 years, mainly to keep things in excellent condition. We bought some parts for the mill. We're working with Ellie, our environmental agency group, very closely to keep up to their very high standards. So we've basically didn't ever imagine the gold price would move as high as you see in that chart. Take a look at that chart. So the guys were selling just at 1,000 euros, and now look at the price. It's nearly 2.6 times higher than that. And we think we're going to see well over 3,000 euros an ounce next year, which means the profitability of a mine like this, the size of this scale, is just incredible. And that's the beauty. Always buy big mines when the cycle turns up, because big mills with big mines make big money.
Big mills with big mines can make big money, that's for sure, Jeremy. And Jim, where have you taken us now?
Hey guys, so we're in the main control room here for the mine. As I probably didn't mention before, of course, Laiva is in Finland. Finland's in Central Europe, so everything here is European. So they didn't skip on the quality or the cost when they built the place. So everything is Metso Autotech, the mills, Metso, all the control system, Metso. We can control the entire process right from the crusher, which again is a Metso crusher, big jaw crusher. And that crusher can process enough ore to feed the mill for 24 hours in about 8 hours. So we've got plenty of capacity on the crushing side, which puts that into a large stockpile. We have a reclaim conveyor running under the stockpile with trapdoors we can control from here. And that ore's fed straight up into that first mill, into the first ag mill. So likewise from here they can control all the operations throughout the plant, leach tanks, the detox system, everything. So yeah, they didn't cut any corners at all. So we're just going to have a quick look how the mill looks from the control room. Just come around to the windows here. Don't know if really it gives it to the imagine of scale, but I mean those mills when you're standing beside them is enormous. I wish I had someone here to stand beside them. You could see, but you can see the size of the ladders and the walkways around the place. It really is large.
Jim, do you want to take the team and show the gold room where all the money's really made?
Yeah, I'm just going to go around the other side. I'll show you.
Keep talking and walking, mate. It's great. I love that.
We'll walk back through the control room. Take out to the corridors of power. as the mill guys would want to say. So we just looked out the other side of the control room where we could see all the process side of things, the mills, all the concentration side. And then, of course, once it's been through the leach tanks and we pull out the carbon comes this way. This is the gold room over this side of the operation. So we'll go downstairs and have a look. But as you can see, from an operational side of things, I don't know how many mines are set up like this, where basically the entire process is in one huge building. And the operators can virtually get up from their desk with their coffee in their hand, walk to one window, walk to the other window, and see the process from end to end. So it's an amazing setup. And of course, being in this beautiful shed, we don't have to worry about the weather. It doesn't matter if it's snowing, doesn't matter if it's minus 20, doesn't matter if it's raining. Everything just runs the same.
Yeah, 100%, Jim. Thank you so much for that overview, and would love to see the gold room as well. But quick question in between regarding when this mine would go into production again next year. How much staff is actually required to run this processing plant?
To run the plant, we have about 60 staff to run the plant. So we run 4 shifts. Five shifts in the plant, because in Finland they like their days off. So we work a 5-shift roster. That way it gives them, they basically work their 40 hours in the week and then have the rest of the time off. And the Finns seem to like that. So, and if it was me, I'd like that too, more time off. Around about 60 guys will be working in here, but across all the shifts.
Yeah, and if that would include mining operations as well?
Include mining operations, because we're going to be owner miners with all your truck drivers, excavator drivers, drill operators, the whole kit and caboodle will be around about 250.
But that's still a very small number for such a large-scale mine if you talk about ounces and tons per day.
Yes, it is. And also you've got to remember that a lot of places will run 4 shifts. We run 5. So if we're running 4 shifts, it'd be more like 200. But with the 5 shifts, it'll be about 250. But that's the beauty of automation. Lots of things are automated, and being open pit, large-scale mining equipment. So yeah, you certainly save on staff.
Sorry to cut you off there, Jim. Sorry, but the previous operator definitely didn't skip on quality of equipment and didn't skip on making those initial investments. And now, thanks to that process going into bankruptcy, you can make use of that for pennies on the dollar.
Yeah, absolutely. We're going to walk down now. We'll show we can't go in the gold room because it's got double locks, and there has to be 2 operators here to open them. So we're not allowed to go in there, but we can go down and have a look from the outside. So we're just going to go through the rest of the office area. Like I say, we come in from the actual plant where we just came through there, control room. Then we'll go through, have some offices through here. I'm in them at the moment, of course, care and maintenance. This will be the plant maintenance engineer's office, Tony. He's our main man here. And he's escaped the camera. Okay, then we come out into what they call the promo area, which is where we actually recover the gold. We look down this way. I think where we just were straight behind us here, looking out those windows. So that's the main office area and control area. Then underneath we have storage area, and we also have the crew's smoker room. Just through that first green door there, and then storage on the other end.
You can see, Stein, why this costs 400 million euros at least today, can't you? Isn't this incredible? It's like a scene out of a James Bond movie.
Oh, yeah. And you can just see everything's stainless steel, galvanized. And I probably didn't get a chance to show you, but I should have shown you one of the angle drives that drive the mixing motors on the detox tanks. The plates they're made out of 2-inch steel. They're just... You look at them and think these are just ridiculously oversized, but that's just the way they build things here. They build them to last. This plant will still be standing here in 40 years' time. No question. No question. I mean, what's been here for 12 years and looks like it's just built yesterday. But that's just European quality. Yeah. But I mean, look at all the walkways. I've worked in mines in Australia that are 4 or 5 years old, and the walkways are all rusting out. Look at them. They're like new.
Yeah, tremendous quality for sure. Perhaps, gentlemen, we can also talk about, I think we have a great picture of what is in place, how high quality this Europeanly built mill is and it's ready to go, what is required to put it into production if you put it into equipment as well as financial terms?
So to get the mill back into production, there's some just routine maintenance to be done. We need to go through and check all the angle drive boxes, change the oil, just general maintenance needs to be done. There is some components that weren't upgraded in the last start that need to be done, such as the computerized maintenance system. And that's another area that let them down previously. Because they didn't have the computerized maintenance system up and running, and they didn't always, and of course that led to them not always having the parts they need on the shelf. They found themselves in a situation where they were doing reactive maintenance. So something would break down, then they'd fix it. Whereas normally in a mill, I mean, you do have breakdowns, of course, unexpected, but normally you have proactive maintenance. So you know how long a component's going to last, and your computerized maintenance system will flag you and tell you that these bearings need changing, or this impeller needs changing, or this pump needs changing because it's getting towards end of life on hours, and you schedule those maintenance runs to be done while you're operating, because just about the whole plant, except for the mills, of course, can keep running with some components down because we have backups of everything. So, for example, if we lose an angle drive on one of the leaching tanks, it doesn't matter. We just bypass that tank, use all the other tanks, do the repairs, and then bring that tank back into service. So there's extra capacity all the way around. So we need to get that all done. We need to change the concentrator ring in the Nelson. Like I say, we have it sitting down here in a large box, which I'll show you shortly. Just basic maintenance type things. We need to put some liners in the aperture of some of the mills, and we'll need to do a reline on the main mill, but not until towards the end of the first 12 months. That's the only really big job we need to do. But otherwise, no. I mean, if we really wanted to, we could turn it on within a couple of days. But of course, we wouldn't do that because we need to make sure we've got everything up to spec.
All right. Well, Jim, thank you so much for that overview from the maintenance perspective. Jeremy, perhaps I can ask you to turn it into financial terms. What are we looking for and what are we waiting for as investors to see this amazing plant buzzing again and producing gold?
Stein basically needs 10 million euros to do this properly and get it restarted, get it producing initially to 50,000 ounces and then grow it slowly to 80,000 ounces. I must be honest, it's taken us a lot longer than we expected, partly because the market up until recently has been in a really dire, poor sentiment generally for the sector, a disbelief generally about the gold price. So we're working very hard. We're going to hopefully announce with you shortly a listing partner and a financing partner to help us do that. But we're also planning to raise it with our own network of wonderful shareholders with this 80-cent round with a full warrant of $1. So 10 million euros gets us into production, and with plenty of spare, what's that word, Jim? Plenty of spare wriggle room or working cap in case you do have delays. But, you know, as you can see in this video, everything's built. Jim spent a lot of time with Komatsu to negotiate a fantastic contract with Komatsu for the trucking fleet. We want to own and operate our own fleet. But I'll pass you now over to Jim and explain more.
Yeah, for sure, guys. I just thought before we went to the Como area, to the gold room area, we just come back through to the mill site. But now we're down on the ground floor, just to give you a bit more perspective of the size of this place. So when we're looking up, I don't know how many stories it is, but I know there's a viewing platform down there and at the top, and by the time, I'm not the fittest person in the world, but by the time I get to that viewing platform, climb on them stairs, I'm done, I'm buggered. There's also some things that we have in this mine that I haven't seen in other mines, such as snowmobile. So we pretty much have everything you could ever imagine that we need, from getting around some of the hard access areas when we do get heavy snow. We even have our own little boat, which we call the Titanic, that if we need to put that into one of the ponds to get across, we can. So we pretty much have everything we need. So yes, it's just enormous, this place. I can only imagine the noise in here when it's running.
Jim, you also keep it heated during the winter. What temperature do you keep the mill heated?
It's around about 5 degrees at the moment. we keep everything heated to make sure that we don't get any freezing in our seals and in any liquids that are floating around in the pipes under the plant. And so our power consumption during the care and maintenance period in summer is around about 250,000 kilowatts a month, because during summer we're doing a lot of pumping, a lot of water handling, and then in winter our power consumption is pretty much the same, because we don't have the pumping, but we do have the heating for the plant. So yeah, we keep the whole place nice and, I wouldn't say it's toasty warm, but it's certainly warm. We'll go through the Como area.
You can see there, Stein, Jim's wearing a Nordic mine jacket. That was from the original operator. There's about 400 of those jackets in the office. And we've decided to keep our costs very tight for now. We're going to print our own Laiva Gold logo on Jim's jacket. But that's an example of things that you get when you buy a big business like this. Jackets, boots, everything that you need to start a mine is available for Jim, except just that working capital to get started.
Yeah, and while Jim is taking us to the next room, where I'm sure we'll see a lot of infrastructure as well. Jeremy, what is the current status of raising the capital? I know you were in talks with potentially a listing partner. Can you share anything regarding that for now, or is it still all up in wraps?
Yes, we certainly can. We are in talks with a London broker to hopefully list Laiva Gold in London. That's where most of the interest has come. We believe Laivas are naturally well located to London with Finland. It's a European asset. There's a very few gold mines on the market in London. Many of them have been bought, Centamin's a good example. So that probably might be our first preferred option, and we're just waiting to announce that over the next couple of weeks. But a major supporter for us as a group, because so far we've done this on our own. We haven't had a broker, we haven't had a shell to back us. So we're really excited to get the business running, producing. The timing could not be better. And as I said to you before, I don't think there's a more profitable business in Finland than gold mining. I just can't think, with the current price where it's at today, it's just it's going to be a wonderful employer in the district of Rahe. The steel mill down the road's running at a third of capacity. A lot of guys have been laid off, so it's really important we get employment back into Rahe. We've been promising that for a while now, but we're not giving up. Fortunately, in the bull market, things tend to work, and they're certainly working now. The market looks like it's going to race, we think, to $4,500 by the end of next year. And can you imagine the amount of money that Jim will make at that sort of price in a weak euro environment?
Definitely. And Jim, where have you taken us now?
Right, guys, this is probably an overly exciting look at, but this is the entrance to the gold room. As you can see.
No, there's a no filming sign. Should we maybe stand somewhere else?
No, that's inside. Yeah, that's what I'm saying. We can't get in here anyway, because like I say, we have to have 2 designated key holders. I have one, of course, but our process manager has the other one, and he's not with us at the moment. But we would be able to film in there anyway. So, of course, there are no cameras, and it's under video surveillance. And here's my bit of finish that I know. That's Rahe, so that means it belongs to Rahe, which is our town. So this is Rahe Woolco, which is the local locksmith company. They provide surveillance cameras, all that sort of thing. So what we do is work with as many of the local companies that we possibly can. There's a local contractor here called Callaway, and obviously we get tenders for anything that we get done. But Callaway's normally got a very sharp pen, and as long as they're got the right place, we try and give the work to the locals when we can. Keep our money as local as we can. Same thing, once we get back into production, we'll be employing as many locals as we can. Right here's a lovely town, got a beautiful big steel mill here, which gives us support for all heavy industry and a very talented and qualified workforce. Let's go around the other side of the gold room. Again, it's not very exciting to look at. This is the other side of the gold room. This is, of course, what I call the combo. This is e-combo ESG. I was talking before about the ceramic ring for the Nelson concentrator. Just to give you an idea of how big this thing is, that's what's in this box. It's not very thick. It's probably only about this thick. But you can see the size of the box. So that's one big ceramic ring in there. And amazingly, when they sent it to us, they sent it air freight. I don't know what it cost them, but because it took them longer than what they anticipated to deliver it, they actually sent it air freight. And we said to them, there's no mad panic. We sent it by sea. They said, no, we'll send it there. And yeah, it's got the LAX consignment sticker still on it.
And Jim, maybe a great point to raise. You're standing next to that ceramic concentrator part, and that was really one of the main reasons we think why Otto Gold failed. The third operator was because that ring failed. They rang. Tell the story of what happened.
Yeah, well, what happens? What the concentrator does, it takes out all the heavies, which of course is obviously the gold, but also takes out any of the other impurities that obviously shouldn't be going into open tailings dams, which need to be stored in lined dams and high grade ponds. So when this stopped, once the wear on this got to the point where it was just letting everything through, the wheels just fell off. So they were sending, I think, something like 40% of the gold to the tailings. Could have been more. I'd have to check my numbers, but it's quite a high amount of gold to the tailings. Because one of the things that we're going to be focusing on is getting more material picked up through the Nelson and through the gravity circuit. We bought a vertical mill to get a finer grind on the heavier material, so we can get more through to the high grade circuit. Our high grade circuit recovers about 99% of the gold, which is an incredible recovery. Our low grade circuit recovers around about 80%. So obviously because it has a lower concentration of cyanide, because that low grade has to go to an open tailings dam, it does get detoxed, so the cyanide gets killed, but nonetheless it goes to an open tailings dam, so that's much more strictly controlled by our environmental licence. But our high grade ponds, our high grade tanks go to lined high grade ponds, so we can use higher concentrations of cyanide. We can have a longer leach time. We keep it in the high grade tanks for 48 hours. And that's why we get those amazing recoveries, 99% recoveries. And this is one of the points that the technical guys like Boyd, SRK have made, is that we should be looking to get more of our ore into these high-grade tanks to get that to extremely high recoveries. So obviously part of getting that is making sure that the Nelson concentrator is working spot on. So we've got a new ring here. Once we get closer to production, we'll order another one and have it on the shelf.
It's all in-house, Stein. You can see here, everything's in-house. We have our own laboratory, everything, our own gold room, everything that's state-of-the-art finished technology, German technology. This is something you find in a world-class operation, a big company like a Barrick or a Newmont. It's as good as you get.
Yeah, 100%. As good as you can get quality-wise. Perhaps we can also talk about what the longer-term strategy with this asset is, Jeremy, while Jim is taking us to the laboratory to see that as well. What is the longer-term strategy for putting this asset into production? Is it what kind of shareholder return should we expect? Should there be an IPO at some point? Take us through that thought process.
Absolutely, Stein. Well, at the moment, we're doing around at 80 cents with a full warrant at $1. That values the group at only 40 million Canadian. And as we said, to build this today would cost you at least 400 million euros, or what's that, 600 million Canadian. So if Jim can really achieve production levels of 80,000 ounces, that's a very profitable business. That might be a $5, $6, $7 stock. But I think longer term, the potential is, do we start to drill this 2 million ounce ore body and take it to 4 to 5 million? Because the average drilling of the 3,600 holes is only 25 meters. So we think this is a massive system. It's never going to be high grade. It's going to be around 1 gram a ton. But there's no reason, our geologists believe, that we can take this not to 4+ million ounces and then let Jim expand the mill, because there's plenty of parts in that mill that you've seen today that have got more than 6,000 tons of capacity. Some of them probably closer to 10 to 12,000 tons. So do we try and make this a really big producer, 150, 200,000 ounce producer? Of course, no one's going to believe us right now. Or, they just want to see us go into production. They want to see that first gold pour. But these are long-term plans that we can start to think about if the market remains as strong as it is today. It's just an incredible market. It's fully built. It's fully permitted. It's just, and it's got an amazing team. And Jim, I do want you to introduce your lovely wife, Lolita, as part of this video, because she makes it all happen. We know the Jackson family are very important to us. And Josh is school today, but it's a real family affair, this. And I know he's from Australia, from North Mackay, Australia, but he's making Finland his home for the last couple of years. Maybe fix the camera. There we go. There's Lolita. Thank you so much. She's an amazing person, wonderful supporter of Jim, Laiva, and the whole team.
Yeah, for sure, guys. I'll be lost without her. Because she always tells me where to go. No, she's amazing. Even out here, freezing her little toes off, carrying the camera for us, so it shows around a beautiful mill. We had a little bit of a technical hitch there. I went into the lab and we ran out of signal, so I dropped out a bit. Actually, we won't be able to go in the lab. There's no signal in there, but we'll go out the front and have a look from the front.
Perfect. And perhaps then once you are at the front, we can take a look at this amazing facility from the outside. And I'll give the word back to Jeremy to end it off and to take us through how people can participate.
Stein, to participate, you're welcome to go onto laivagold.com, look up Edward Baum, leave us your phone number. I'll give you a shout. I'll tell you our story. I'll tell you our plans and our dreams, why we want to take Laiva. The minimum investment is $2,000 for sophisticated mums and dads. We have over 500 shareholders on the Laiva register. They've made all this happen. Our largest shareholder is BlackRock, the very large American institution. They own 15% of the company. So we're backed by the largest institution in the world, but also 500 amazing mum and dad supporters as well. And there you can see Jim outside to get an idea with Lolita, just the size of this mill. And the beauty of it is fully covered, so the weather has not aged it or affected it one little bit in the last 10 years.
Yeah, it's a great view from out here. I probably can't really pick it up on the video like I can, but it's time here about almost 2 p.m. in the afternoon. We've probably got another hours of daylight, then it'll be dark. And you can just see the sun peeking through what we call the churches, where we stockpile the ore after it comes from the main crusher. Stockpiles in the church. We have the trapdoors underneath with the reclaim belt, and that runs up into the mill. On the external part of the mill, we have 2 smaller buildings. In these buildings, we have cone crushers. The closest one to us here, there's a 200 horsepower cone crusher in there, and then the next one down has a 100 horsepower cone crusher. And of course, this takes the oversize from the mills, knocks it down, and then runs it back. Probably can't see the belt, but it runs it back onto the main belt, back into the plant again. So that's something else we're looking at to reduce the amount of recycled ore that's going around this system here. And we believe that a lot of those issues are caused in the pit when it comes down to the fragmentation and the blasting. So we're talking to an expert out of Australia, of course, who's going to help us with our freeze blasting and our fragmentation when we get back in production. So there's our building behind us. You can see the size of the windows that we were looking at before compared to the size of the mill.
Can you walk up those spiral staircases, Jim, for us?
Just let me check in now.
Jim, thank you so much for the great overview. Great to see what that you are learning from the mistakes made by the previous operator and trying to mitigate those. Jeremy, thank you so much for your time as well. Really appreciate the overview.